We have to discuss questions today.
Yes, sir. Today we have to discuss the questions. First, we have to discuss the questions in the last class.
Your voice is coming from far. I'm not able to get it.
Yes, sir. Because my camera is going like I'm searching for my notebook.
Okay, so here is the question I'm sharing with you. This is the first case, question number 41. On 31st March 2016, the balance sheet of A, B, and C, who were sharing profit and loss in proportion to their capital, stood as creditors 10,800, bills payable 5,000, capital account A, B, and C 45,000, 30,000, and 15,000. Now, uh, cash at bank is already given here, debtors, provisions, stock, machinery, freehold premises. After that, it is written B retires and the following adjustment readjustment of assets and liabilities have been agreed upon before ascertainment of the amount payable to B. That out of the amount of insurance which was debited entirely to profit and loss account, 1,000 be carry forwarded for unexpired insurance. Freehold premises be appreciated by 10% provision for doubtful debts are brought up to 5% on debtors. Machinery be depreciated by 5%. Liability for workmen compensation to the extent of 1,500 would be created. That the goodwill of the entire firm be fixed at 18,000 and B share of the same be adjusted into the account of A and C, who are going to share future profits in the proportion of 3 by 4 and 1 by 4 respectively. Entire capital of the firm as newly constituted be fixed at 60,000 between A and C in proportion of 3/4 and 1/4 after passing entries in their accounts for adjustment, that is actual cash to be paid to be brought in by continuing partner as the case may be. B be paid 5,000 in cash and the balance be transferred to his loan account, prepare capital account of partners and the balance sheet of the firm of A and C. So there is two things that we need to prepare: partner's capital account and balance sheet. All other things that we will do in this question will be working. Okay, like we have to calculate a revaluation profit and loss. It is also part of working, not the main solution because it is not asked in the question. So whatever question is asking, it will be your main solution. So we will solve this question. Question number here it is 41. Now, the main solution is two things we have to do. One is partner's capital account. This is the format of partner's capital, and here is
Sir, I can't see your screen. I can see the question right now.
just question.
Yeah.
No issue. Maybe it is loading. When you will see this, tell me.
No, only question. The question also the blur right now.
Your Network is working fine.
Yes, sir. That is fine.
Okay. Actually, it's raining today here. That's why maybe some loading problem. But no, my internet connection speed is showing in Mbps. What is possible?
So my is showing very good network right now. Can you refresh it? I think it's like sometime it's happened with the server also. Server will be stopped sometime.
Tell me when it is visible to you. I'm preparing the format until then.
Yeah, now I can see your screen.
As on 31st March 2016, it is. Okay, so this is the main thing that we have to do. Now we will discuss the working note. First of all, the old ratio was 3:2:1. So the first working note, new, actually new ratio is already given. So we will calculate gaining ratio then.
Okay.
Now, gaining ratio, it is B retires. So we have to calculate it for A and C. So A new ratio is 3/4. C new ratio is 1/4 minus their old ratio is in actually, let me write this, then you understand. Old ratio is in proportion to their capital. Their capital is 45,000, 30,000, and 15,000.
Okay.
So 3, 2, 1. So it was 3/6 for A and 1/6 for C.
Yes, sir.
It is 3/12 and 1/12. Okay, so we can This is the gaining ratio. If we convert it into ratio, otherwise it is 3/12 or 1/2. Okay. Is there any confusion in this?
No, sir. That's clear.
Okay. Now, after that, that out of the amount of insurance which was debited entirely to profit and loss account, 1,000 be carry forwarded for unexpired insurance. Unexpired insurance means working note number 2, a revaluation profit loss. A revaluation profit loss. So
Loss. Yeah.
first of all, there are certain items which is unexpired insurance. These are gain. These are gain for the business. Unexpired insurance 1,000. Freehold premises be appreciated by 10%. So freehold premises value is 50,000. So freehold premises 50,000 into 10%. It is to be appreciated by 10%. So 5,000. This is also profit. After that, provision for doubtful debts are brought up to 5% on debtors. Brought up to means 10,000 into 5%, 500. So it is already created by 200. So we need to increase it by 300. So minus provision for doubtful debts 300. Then machinery to be depreciated by 10%. So machinery value is 24,000. So it will be 24,000 into 5%, 1,200, 1,200. After that,
1,000.
liability for workmen
Okay.
compensation to the extent of 1,500 would be created. So workmen compensation liability. Yes, you were saying something.
No, no, I'm reading that question on like you're done. This like repeating it that your words.
It is repeating
Yeah, like some your words repeating like it double voice coming.
my voice.
Yeah.
Tell me, it is a repeating again.
Mm, yeah, not like not too much right now. We can continue like it's like not too much. It's like little bit coming.
Okay. So now it is 15,000 here. And if you add these three, so you'll get 3,000. So revaluation profit is 12,000. Okay. Revaluation profit. So we have completed up to point number E. Now, after that, there is goodwill, 18,000 value of goodwill. So working note number 3. In this question, everything is given. It will take time. So first of all, B is a retiring. So B share will be 18,000 into 2/6. So 6,000. B is getting 6,000 for his goodwill, and it is to be contributed by A and C. In which ratio? 3:1. So 6,000 into 3 by 4 and 6,000 into 1 by 4. So 4,500 and 1,500. So goodwill is also completed.
Okay.
Okay, now all the things are related to, so we will prepare capital. First of all, here by balance BD, capital account of A, B, and C, 45,000, 30,000, and 15,000. Just 1 minute.
Okay, sir.
Okay, so by balance BD, 45,000, 30,000, and 15,000. After that, revaluation profit share. Okay. Revaluation profit share, actually we have to calculate. We have not calculated it. So I have to, which party insurance? Wait, sorry. It is 6,000 minus 3,000. It is 3,000. Okay, it is 3,000. Actually, I have added this 1,000 plus 5,000. I have written it 15,000. So that was a mistake. 1,000, 5,000, 6,000 minus 3,000. It will be 3,000. Okay. And revaluation profit, when we distribute it between partners, then the ratio is 3:2:1. So by revaluation profit or revaluation account. 3,000 into 3:2:1, which it will be 1,500, 1,500. After that, gaining ratio, devaluation profit, completed goodwill. B is getting 6,000, and these two will pay by A and C capital 6,000 and to B capital 4,500 and 1,500. Okay, so we have written everything in capital account. We have done our, there is no reserve in the quotient, there is no existing goodwill in the quotient, so that's why no adjustment required for these two. We have completed revaluation and goodwill. So there was only two things. Now, according to the point number G, yes, entire capital of the firm as newly constituted be fixed at 60,000. So new capital is given. So we have to calculate proportionate capital. Working note number 4. Yes, 4. Proportionate capital. Proportionate capital will be 60,000 into 3 by 4. It was for A. And for C, it is 60,000 into 1 by 4. So whatever the new ratio, we multiply the new capital with the new ratio so that our new proportionate capital will be calculated. So 45,000 and 15,000 here. Now I told you that this proportionate capital will go here in balance to balance CD 45,000 and 15,000. Before that, we have to do one more thing here. We have to calculate amount payable to B. Amount payable to B is 36,000. And there is one more line written here. 36,000. 37,000, sorry.
Yeah, I was thinking how you written 36,000 there.
Actually, sometimes I make these kind of mistake and it is repetitive. I don't know why it happens, but when I make one mistake in calculation, I don't know why it keeps repeating. So 37,000, and it is written that 5,000 is paid immediately in cash and the balance will be transferred to his loan account. So to cash 5,000 and balance will be transferred to his loan account. So to be loan 32,000. Okay, so we have completed the point number G, H also. Okay. First point was for revaluation, second for revaluation, third for revaluation, fourth and fifth for revaluation. Sixth was for goodwill, which we have completed. Seventh, point number G, was for adjustment of capital and cash to be paid or brought. B, be paid 5,000. Point number H, I have completed. So now nothing left. Now only balance sheet part is left. So we will write those items which is not changed. So creditors 10,800 is same. So I will write it here, creditors 10,800. After that, bills payable, there is no change in bills payable either. So bills payable, it is 5,000. B loan account, because the balance amount was transferred to B loan account, so 32,000, and then capital of A and C. So proportionate capital will be written here 45,000 and 15,000. So total 60,000. Okay. Cash will change. So I will write just cash at bank, not amount of this. because it will change. Debtors, there is 10,000 of debtors minus provision, which is increased to 500. So 500 here, 9,500. Then stock 9,000. So there is no change in stock 9,000. There is change in machinery. There is depreciation of 1,200 into 24,000. So 22,800. After that, freehold premises, it increased by 10%. So 5,000. 50,000 plus 5,000, 55,000. So every item is completed, only cash at bank and capital is left. So let us complete capital account. So 45 plus 1, 46,500 it is. And here it is 15,500. So 46,500 and 15,500. We will calculate the balance. It will be 2 balance CD. 42,000 here and 14,000 here. Now this balance will come here by balance CD. 42,000 and 14,000. So this is adjusted capital 42,000 and 14,000, and this is proportionate capital. Now we will calculate the difference, and difference will be either brought in cash or paid in cash. So tell me, who will bring cash and who will actually both one is bringing cash. 45,000 here, 15,000 here, 45,000 here, and 15,000. So 3,000 and 1,000 by cash. So they brought 4,000 together, 3,000 by A and 1,000 for by C. So 4,000 they brought, and there is a cash withdrawal of 5,000 by B. So cash at bank balance is 13,000. We will add for 4,000 here and deduct 5,000. So it will be 12,000.
Okay.
Now calculate the total amount. $45,000, 9,500, 55,000, 20 cash at bank, B capital, 4,500, 1,500, revaluation profit, 46,500 minus 4,000. So 42,000 and 40,000. Okay, so 3 and 1, 3, 1, 4, 13, 4, 17 minus 5 will be. Okay, so add there is cash at bank, debtors, stock, machinery, freehold premises. Cash at bank, debtors, stock, machinery, freehold premises. There is one insurance and one liability for workman compensation. So these two will be written here. Workmen compensation claim. Workmen compensation claim 1,500, and there is unexpired insurance. It is gain. It is an asset for the company. So 1,000 unexpired insurance and done. Now add all the items together. So 10,800 plus 5,000. 10,800 plus 5,000 plus 1,500 plus 32,000 plus 60,000. So 1,09,300. After that, there is 12,000 plus 9,500 plus 9,000 plus 22,800 plus 55,000 plus 1,000. So 1,09,300.
300.
Now, I will explain one more time this solution so that you will understand, because at first time I was solving the question. First of all, I have calculated gaining ratio. I don't think there is any confusion in gaining ratio. Yes or no?
Yeah. Wait. No confusion. Getting ratio. No confusion.
Okay. Revaluation profit and loss. I can prepare the revaluation account for calculation of profit or loss, or I can prepare any statement. So these two was to be added,
Added.
and this is the less side, means these are the losses, these are the gains. So 1,000, 5,000, total 6,000, and here 300, 1,200 and 1,500, total 3,000. So it is a profit of 3,000, which is distributed in the credit side of the partner's capital, 1,500, 1,000 and 500. Okay, actually for this there is no space left, that's why I didn't do the calculation. Otherwise I have to do 3,000 into 3 by 6, 3,000 into 2 by 6 and 3,000 into 1 by 6, and then I have to calculate this amount. Okay, after that there is goodwill of 18,000, which is I have done in working note. Goodwill B share was 18,000 into 2 by 6, so 6,000, and this 6,000 is distributed between A and C in their gaining ratio 3 by 4, 1 by 4. So 4,500, 1,000. So here is the goodwill, and this goodwill is written on the debit side of A and C capital. After that, there is no items left in capital account. There is only one payment of 5,000 to B, and the balance amount of B capital is transferred to his loan account. So total amount of B is 37,000, 37,000 minus 5,000, so 32,000 transferred to his loan account. Now, we have calculated the adjusted capital of A and C. It is 42,000 and 14,000. After actually whatever the adjustment is given in the quotient, you have to adjust all those items and calculate the balance of remaining partner. And this balance is compared to the proportionate capital. So after calculating this, it is transferred to the next part of capital account. And now it is compared with this balance, which we have calculated in working note number 4, proportionate capital, because 60,000 is the firm's capital, new capital, and it is to be distributed into their new ratio 3 by 4, 1 by 4. So 45,000 and 15,000. So this is written as here in balance. This is the new capital of remaining partner, 40,000, 15,000. So now we have to compare it with their actual capital. So A actual capital is 42,000, but he has to maintain 45,000. That's why he brought 3,000. In the same manner, C actual capital is 14,000, but he has to maintain 15,000. So he has to bring 1,000 in cash. Tell me if there is any confusion in capital.
No, sir.
Okay. After that, there is balance sheet. In balance sheet, there are certain items which is changed now, and there are certain items which is same as previous amount. So creditor is same, 10,800. Bills payable is also same. Stock is same. What are changed now? This item is new. It is written in a revaluation. Uh, Daters, this is changed. Machinery decreased by 1,200. Machinery value was 24,000. It is now 22,800 because 1,200 is deducted as depreciation. Freehold premises was 50,000 plus 5,000 appreciation, and this unexpired insurance 1,000. This is also part of revaluation. So these 5 items we have adjusted in revaluation. After doing this, we have calculated cash. How we have calculated cash? So 13,000 was the balance, plus 4,000, which is brought by remaining partner, minus 5,000, which is paid to B. So 13 plus 4, 17, minus 5, 12,000. So 12,000 here. After that, here it is the B loan account, because after payment of 5,000, B capital account balance was 32,000, which is transferred to his loan account. Capital account is amount of proportionate capital, so 60,000. This is the this is given in the quotient, new capital of firm. So after that, we have totaled it, and the both side total is 1,09,000. Tell me.
Okay, sir.
Now, the thing is, what if there is no information? You understood this part. Is there any question
Yes.
you want to ask?
So question is not there, but I want to know from you have done this thing. This cash bank one 30,000 you have written. Why you have written 12,000 there?
I explained that right now. The amount of cash is 13,000, which is given in the balance sheet, and there is 4,000, this amount that they brought. A and C brought this 4,000 to maintain their capital. So 13,000 was the balance, and they brought 4,000, so 17,000. And there is a payment of 5,000 to B. So 17,000 was the balance, and 5,000 is paid. So now it is 12,000. Done?
Yes, sir. I understand.
Okay. Now, the second case, I'm talking about second case in the same portion. Let's say this new capital is not given. This part is not given in the portion. So if new capital is not given, it will become the second case. Yes or no?
Yes.
In second step, actually in second case, there is a second step where we have to calculate new capital. And how we calculate new capital? On the basis of their adjusted capital. So it is already calculated, 42,000 and 14,000. Yes.
Yes, sir.
So adjusted capital of a remaining partner, that is A and C, will be added to calculate new capital of the firm. So 42,000 plus 14,000, this will be the new capital. New capital will be 42,000 plus 14,000. Adjusted capital of C, adjusted capital of A. So total is 56,000. Now, proportionate capital. Now, this total capital we have calculated will be distributed. So A 56,000 into 3 by 4 and C 56,000 into 3 by 4, into 1 by 4. So it is again 14,000 and 42,000. So in this case, it is same because you can see adjusted capital is also 14,000. New capital is also for 42,000. Here 14, 14. So both are same. There will be no cash withdrawal or cash brought by partner. Okay, because in this case, adjusted capital and proportionate capital is same. But in some of the cases, there will be difference between adjusted capital and proportionate capital. So again, we will write this amount as balance CD, this amount as balance BD, and then compare it like we have done here. Balance CD, balance BD, and then compare it, and the difference is transferred to cash or current account. In some of the question, it will be said that transfer the difference into current account. So in that case, you have to transfer the difference into current account, not in cash. Okay.
Okay, sir.
So this is question number 41. Let me try find a question. One more question. Okay, can you see the new question here?
Yes, sir.
Okay. Now, in this case, if you read any of the adjustment up to this point, there is no new capital given because the first point
Yes.
was freehold premises in a stock, machinery and furniture, good provision for doubtful debt. Goodwill of the firm is valued at 21,000 on jet retirement. The continuing partner have decided to adjust their capital in the new profit sharing ratio after retirement of jet. Surplus deficit, if any, in their capital account will be adjusted through current account, not in cash account. It is to be adjusted in current account. So in this portion, new capital of firm is not given. Can you tell me this is case 1 or case 2?
This is case 1.
Case 1 of
Because,
adjusted capital?
yeah, because
Okay. What was the case 1 heading?
that are different. Wait, this one heading about this one or case one heading is when the